So, I mean, we all know exactly what to do during an earthquake drill, right? But what actually happens to your local grocery store when a severe solar storm, completely fries the banking grid? Today, we're doing a deep dive into a Spanish language business continuity report to, well, explore how companies actually survive catastrophic force majeure events.
Right, moving way beyond just physical safety and into the actual mechanics of financial survival.
Exactly. Because there is just this massive preparedness gap here. I mean, large corporations use these global standards like ISO 22301 to dictate strict recovery protocols, but for small and medium businesses, it's like riding out a hurricane in a luxury cruise ship versus a wooden rowboat.
Yeah, that rowboat analogy gets right to the heart of it. Because, smaller boats often sink from invisible leaks. We're so conditioned to think of catastrophes in purely physical terms, a collapsed wall, flooded streets.
Right.
But this report argues that physical survival is really only half the battle. I mean, it's the financial and technological threats that actually bankrupt a company the next day.
Well, let's look at the physical side first, just to compare. The sources highlight Mexico as a prime example here.
Oh, definitely, with the SASMEX alarm and everything.
Yeah, thanks to those tragic earthquakes in 1985 and 2017, they developed excellent physical evacuation protocols. But then you look at the financials, and less than 20% of these smaller businesses even have property insurance.
It's staggering.
It is. And on top of that, there's this massive blind spot regarding severe solar storms that could, knock out GPS, telecom, and our entire digital payment grid.
Well, it really comes down to human nature, doesn't it? We prioritize immediate visible threats. Businesses will pour money into fireproofing their physical storefronts, but leave their digital infrastructure entirely exposed.
It's like buying a heavy-duty helmet but completely forgetting your parachute. You spend all this time fireproofing the building, but the foundation it runs on can just be blown away.
Exactly. And if we look at recent events from 2026, the true mechanism of business failure becomes really obvious, like during the June 2026 earthquakes in Venezuela.
Which were devastating.
Right. The report shows that without immediate liquid assets, recovery was just paralyzed. I mean, businesses couldn't pay employees or secure transport. And then you look at the 7.4 magnitude earthquake in Colombia in August of 2026.
That's the one where the epicenter hit vital economic hubs, right?
Yes, exactly. What that event proved is that even if a business's building survives totally unharmed, severed supply chains and offline banks will just choke a company's cash flow in a matter of days.
Wow.
Yeah, you don't need your building to fall down to go bankrupt. You just need your ecosystem to stop flowing.
So, since frozen liquidity and broken supply chains are the real threats here, how do smaller businesses actually protect their cash flow without, massive corporate-sized budgets?
Well, the sources outline a pretty pragmatic, low-cost playbook. First, identify your single points of failure, or SPOFs, like what is the one supplier or payment channel that, if it goes down, stops your business cold?
Okay, makes sense.
Yeah.
And then,
Once you map those out, you build a resilience fund. The report suggests dedicating just 2 to 5% of your monthly net profits to a highly liquid separate account.
wait, really? But why rely on a resilience fund at all? I mean, isn't that literally what property insurance is for? If a disaster hits, shouldn't they just wait for the payout?
You would think so.
Yeah.
But waiting weeks or months for an insurance adjuster to evaluate the damage is basically a death sentence for cash flow. This is where the report proposes a really fascinating solution: parametric insurance.
Okay, parametric. How is that different?
Unlike traditional insurance, where you wait for an adjuster to argue over the cost of a ruined printer, parametric policies pay out based on objective data.
Wait, how does that trigger then?
If a specific threshold is crossed, say a 7.0 magnitude earthquake is recorded by seismographs in your area, or a Category 4 hurricane makes landfall, the policy just pays out
No.
automatically.
Oh, wow. So it completely removes the human bottleneck.
Exactly. It injects cash into the business instantly. The report also heavily stresses securing emergency credit lines before a disaster strikes.
Right, because once the ground stops shaking, banks instantly freeze lending in disaster zones, right? Because they have to reassess the newly introduced massive risk of default.
You nailed it. But, you know, parametric insurance solves the cash flow problem, but cash doesn't matter if your digital systems are wiped out.
So how does the report suggest handling data?
They outline the 3-2-1 backup strategy. That means keeping 3 copies of your data on 2 different media types, with 1 stored in the cloud.
Got it. 3, 2, 1.
Right. But they also highlight physical tech readiness, specifically having offline point-of-sale terminals so you can still take payments when the power goes down.
Wait, hold on. How do offline terminals actually help if the banking grid is down for days? I mean, how does the transaction actually clear?
So the terminal securely stores the encrypted transaction data locally. The customer walks away with their goods, and once the internet connection is eventually restored, the terminal uploads all those queued transactions to the bank for processing.
Okay, but doesn't that carry a risk of a card declining later?
It does carry a slight risk, yeah, but it keeps the business functioning in the moment, which is critical. The report also suggests forming emergency supply agreements with your own business competitors to, share resources during a crisis.
Oh, wow. It's basically a mutually assured survival pact.
Completely.
Well, whether you run a company yourself or you just rely on your local grocery store, understanding this operational fragility completely changes how you view disaster readiness.
It really does. It's a total wake-up call.
It is, and I want to leave you with this thought to mull over. If a severe solar storm knocked out our digital transactions tomorrow, and offline payment terminals are as incredibly rare as the sources suggest, how would our increasingly cashless society actually buy necessities on day 3?